Starting! Yay! And you're live! Woo-hoo. Oh, that's what I didn't do. Darn it, I didn't open that up. Where to next? That's wonderful. Okay, we're signing into the 10-minute trader, into the members area. We're going to look at the stock tips. We're going to open that up so we can get started. This is what you see when you're in the members area. Come on, open up. That doesn't want to open up very well, does it? New tab. And open up a new tab. And then we want to look at the stock tips. All right, so this is what we're going to be looking at. Anyway, let's jump back to the very beginning so we see where we're all starting from. As you can see, it is 9 o'clock on a Tuesday, December 20th, 2016. Okay, we all know that I like to use Thinkorswim. I like to look at dividend stocks specifically. Let me give you a brief rundown why I like to look at dividend stocks. Number one, they're safe and secure for the most part. Number two, I only trade the ones that have a minimum of 25 years worth of increased dividend payouts. Now, it may sound as if it's limiting my choices, but there's over 225 of them to pick from. Now, 225 to make trades on is a nice number. It's a nice round number to start out with. So every day I have something different to look at. Do I trade every day? No, I don't trade every day. Sometimes my money's all tied up. Sometimes I could trade 2 or 3 times a day or trade 2 or 3 times a week. It all depends on what the market looks like and the situation at that moment in time. So let's begin. So it's 9 o'clock right now, Tuesday night, and Tuesdays I like to reserve just for dividend trading, just for, dividend investing. Thursdays we go a little bit deeper with the options. So tonight I'm going to try to stay away from options. I'm going to just try to stick with dividends and dividend capturing and dividends on steroids. That's where we like to get a little bit more money out of our trades. Okay, so it is the 20th of December, and as you all know, I look 10 days in advance. Okay, there's a reason why I look 10 days in advance. It allows me to set up my trades for the upcoming week. It allows me to make adjustments before the stock actually pays out its dividend or before the EX date. Okay, so for instance, today's the 20th. First thing this morning, I would have been looking at stocks that were trading, that were going EX or having the EX date on the 3rd of January. Okay, that's 10 days. That's 10 trading days. Okay, now considering we can't trade anything today, we're going to be looking first thing tomorrow morning, which is the 21st. So we'll look at everything on the 4th of January. So let's quickly jump over to the 4th of January and see who's paying what. Okay, so here's our list. And before we jump into January's list, let's just take a quick look at what's happened today. Okay, today's the 20th. 15 companies. Okay, 15 companies, here they are. Now I'm going to list from high to low because I don't like doing anything that's, below 10 cents. So there's only one below 10 cents. So here's the highest one, PM, MO, all these companies. Some of them you may know right off the top of your head. Some of them you may not know. So let's just take a quick look. Now, 10 days prior to this, we would have gotten this list on the 5th of December. Because I mail them out on Sunday, and you get them first thing Monday morning. So the very first one you would have been able to do would have been on the 5th. So we're going to be looking at getting in on the 5th. All right, so let's put in the very first one, which would be PM. Okay, now, quickly. PM has a high for the year at 104 back in July. Had a low of the year back in January. Okay, last 90 days, she goes sideways for a little bit, made a big drop. Ooh, what's that date? That's election day. My goodness, election day. 1, 2, 3, 4 days in a row. The election was the 11th, then gapped down on election day and tanked quite a bit for 4 straight days. Then it found its bottom right about there, and she's been going sideways for a little while. So they have a dividend coming up, which was today. So today they paid out their dividend. So let's look 10 days prior to that, and we said that was going to be the 5th. Right here. So if we had gotten on the 5th, like we said we would have, the stock, okay, now here's the pricing here. This is the opening. This is the high of the day. This is the low of the day. This is the close of the day. Blah, 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 blah. Okay? So, on the 12th, here's the dates down here. So, 12/5, which is the day you would have gotten the tip. So, you would have gotten it first thing in the morning. At the opening price was $87.92. Now, we're looking for a $1.04 move. So, the target would have been 88.96. Okay, but the high of the day was 88.32. It's a nice move, but didn't hit the 88.96. The second day had a high of 88.47, didn't hit then, and there you go right here. Third day, you would have been out with your $1.04 move. Now, I explained in a few videos beforehand, there's a bunch of different exits. There's your stop, there's your stop loss, there's your trailing stop. Now, all of them have a different function, and all of them have a different purpose. Now, basically, we just use an exit order, which is a limit order, good till cancel, which is a GTC, good till cancel. It means we want to hit our target price and we want to get out. However, I've been telling people that you might want to incorporate the trailing stop. But that hits the target price, but it doesn't get you out at the target price. Okay, it moves your stop up as the stock increases. Now, there's good parts about that and there's bad parts about that, because the trailing stop also does it moves up along with the stock price. And if there's any correction or if there's any down movement, like I'll give you a perfect example. Right here, that like we said, the third day you would have hit your target price. Now, it had a high of 89.89. Now, that's a little over $2 of a movement, but it also had the low of 87.90. Okay, so that is a $2 spread between the high and the low of the day. So depending on where you have your exit point, and if you have a trailing stop and you don't give it a lot of wiggle room, you would have been called out on that day, and you would have missed all this movement here. Okay, even though this one was a down day here, look at where it hit. The high of the day was 92.63. Now, if you had a nice wide, it had a lot of space in your trailing stop, you may have hit that $92. I don't know. You don't know either. Nobody knows. But you definitely would have hit the 104. See the dividend right here? Get the opening price for the day, which was 87.92. We add the dividend price, and that would give us our 87.96 for an exit, just to collect the dividend and move on to the next stock. Okay, so let's look at the next stock. MO. Let's put that in there. MO. I believe that's Monsanto. Now, Monsanto for the year had a high of 69.98. It had a low, 69.98 for the high was somewhere in June, the end of June, beginning of July. And the low was back in December, January of last year. The last 90 days, we're looking at basically going sideways, because you had started out October 31st, came down. And look at this, another one. Election day, this thing hit a nice little high. Then the next day, 4 down days in a row. This is 2 companies in a row that hit 4 down days in a row right after the election. Then from there, a nice steady move upward. Okay, had a low right there after the 4-day drop of 61. Now she's up to 67.34. Okay, so let's jump to the 5th, because that's what we're looking at of our entry point. Remember the entry point? The 20th. So the entry point would have been right there. See, 10 days prior to that would have been the 6th, which means you would have gotten the tips on the 5th. Okay, so the 5th, right here, the opening for the day was 63.92, and we're looking for a 61-cent dividend. So 63.92 and 61. What is that? 64. Oh my goodness, 64.53, something like that. Okay, so it had high of the day for 64.44, didn't hit it. Next day, 64.32, still didn't hit it. Third day, another one, third day. So this is the second one in a row. It would have been third day. 64.49, which went over by a buck. Well, like $1.60 went up. Again, if you had the trailing stop, look, you could have rolled this baby up, depending on how wide of a spread you had for your trailing stop. If you're just looking for the 61 cents and get out, 3 days, you're out of there. Okay, let's look at GSL. GSL. Now this one, I'm going to pass up, because look what the stock is. The stock is $1.56, and they're paying a 54-cent dividend. Something ain't stirring the Kool-Aid. That is 30% dividend. That just ain't right. I stay away from those. So look at, you got your high here at $4.50 and your low way down here at $1.07. And you really want to get into this? No, thank you. I'm going to pass on that one. All right, next one we're going to look at is CPLA. They got a 41-cent dividend. Put that in there, CPLA. CPLA, 41 cents. All right. Now, CPLA, we had a high of 89.84 right here in December, and a low way back in January, the beginning of January, of 39. That's a big move from 39 all the way up to 90. Wow. Okay, so the last 90 days, a nice steady up move. It went from 56 all the way to almost 90 in the last 90 days. That's a big move. Okay, so let's look at the 41-cent move on the 5th. Where's the 5th? Here we go. December 5th. It opened at 87.10. And we look at 41 cents. It hit the very same day. We had the high of 88.05. That's 95-cent move on the first day. So you would have been out on the first day. But then again, the trailing stop, you would have hit, and maybe been out on the third day. Who knows? Who knows? VAC, let's take a look at VAC. All right, we're looking at VAC and see what VAC is going to do. VAC. Now, VAC, we have a high for this year at last week, 12.14, and the low of the year was back in the beginning of February. Okay, last 90 days. Wow. Made a low down here in the beginning of October. Sideways for a while. Beginning of November. And then she shoots up. This one, look at this. Right around election day, up, and it just keeps on going. It went from 63 all the way to 87 from the beginning of November. So that's pretty good. Okay, let's look at the 5th, which would have been out 10 days. And here we go right here. 12.5, we're going to end. VAC, we're looking at 35-cent move. It opened up at 82, and it hit 82.45. Yeah, you would have been out the very first day. Who knows? Could have been out in the first couple hours. I don't know. I'm not looking at the day chart. That's just looking at the weekly chart. Again, might be a good idea to look at the trailing stop, because look at 1, 2, 3, 4, 5 up days in a row. Could have made a nice move. Who knows? All right, it's a quarter past. Let's look at a few more. Why not? Not a lot of activity going on at the moment. So let's look at GTY. GTY. Again, look at this. The high in December, just this week. Actually, on the 16th, it hit the high for this year. And the low was back in January, the middle of January. Last 90 days, basically from the beginning of October, she was down, then it was sideways for almost the whole month of October, right into November. And look at here, right at the 8th, Election Day. She drops one down day on Election Day, and then straight up from 22 down to 25. This is not a big move, but let's go from the 5th. Where is the 5th? Right there. Here we go. So here's the 5th, and we're looking at GTY for a 28-cent move on the 5th. And it opened up at $23.95, and is at the high of $24.23, which is 28 cents. Would you have made it? Probably not. I mean, don't get me wrong. How often do you get in at the opening? I mean, the exact opening, right? Which wasn't the low of the day, but it was the opening. The opening was $23.95, and it only hit 28 cents for the day. So would you have hit it? Who knows? You may not have. I don't know. I really can't say. But it did make the 28-cent move that day. Had you stayed in the very next day, you would have been out because it gapped up. It opened at $23.32, which would have hit you 28 cents, so you would have been out the very second day, at the opening of the second day. So that's cool, too. It's always nice to get out at the beginning of the day. A couple more? Why not? All right. PNNT. PNNT. Okay, the high of the year is right there at September 6th. The low, way down here, January. That's my birthday, right? Right down there in January. The last 90 days. She's going nothing but sideways. Gotta love it. Nothing but sideways. Okay, she starts out 90 days ago, $7, and what? $7.64. Now she's at $7.88. Not a big move, but we're looking from the 5th. We're looking at a 28-cent move from the 5th. Where's the 5th? The 5th is a doji for the 5th. Gotta love that. All right, so she opened $7.60. And the high was $7.64. Not a lot of movement there now, is there? Okay. All right, so we're looking at 28 cents for a very small stock. I'm not even sure if this is going to be a good one because I haven't put it into all the other calculators. It's a very low price stock. It can really make a 28-cent move. And what is a 28-cent move on that low of a stock in the first place? So let's take a quick look. Let's take a look at this. And we're looking at PNNT. This you can get if you're part of the, if you're in the membership. Okay, this is going to give you a bid right here. So show what we're looking at. Look at this. It didn't make it in 2014, didn't make it in 2015, and average is 5 to 7. Look at this, 29 days here, 10 days there, 10 days there, 14 days. I'm going to say no. I don't even like it. I wouldn't do this one. So whether or not it makes a 28-cent move or not, and look here again, 300,000 shares traded on a daily basis, on average. So I wouldn't do this one. So we're going to say no to that one. Well, let's go back and see who's next. PNNT, we didn't like that. All right, CYS. CYS. Now, CYS has a 25-cent move. It's another $7 stock. Okay, it had a high in August of $9.15. The low, 6 1/4 back in January. Before we go any further, let's see what it looks like. Let's reset that. What was that stock symbol again? Stock symbol was CYS. Put it in there, CYS, and hit go. Find out what that looks like. All right. I don't like the numbers. See, it's missing 2 years of data there. Look at these numbers: 5, 6, 7, 32, 37, 5, 0, 45, 46, 0. I don't like it. I'm going to probably say no to this one also. And look at that, a 13% yield. That's a dead giveaway right there. I mean, do I want to wait 27 days to try to get it? No. All right, let's pull up this one. CYT. Is that right? CYS. Okay, this is another piece of software. CYS. CY. And let's see what that does. Okay, this gave me a big fat no right here. Because look, 10 days prior to, it goes sideways, and she drops like a rock. And she doesn't come up above it, up above that line at all anywhere. I'm going to say no. Look at that, average of 10. No thanks, pass. All right. There's a few things I haven't gone into yet here. CYS, we didn't like that one. LTC, jump onto that one. $47 stock. I like that better. It makes more sense of those numbers. It's a 19-cent dividend, very low. At the high for the year back in September, early September, $54. The low way down here at $40 back in February. The last 90 days don't look good. She starts up October around 50. She drops down to 45 and she goes sideways for quite a while. She settles at 47. And let's take a look at the 5th, because that's where we say our entry date was. And we're looking for 20 or 19 cents. Okay, so she opened up at 45.26 and at 45.65. That could be the 20 cents right there. Okay, very first day, in and out. First day, gotta love it. Dividend check, cha-ching, whatever. But again, look at the trailing stop. 1, 2, 3, 4, 5 days. Even though this was a down day, she opened up at 47.13 and hit a high of 47.87. So if you had a trailing stop, you could have went all the way up to here somewhere. Okay, we're gonna have to get into those trailing stops a little bit more so you guys can understand them. But let's just stick to the basics. Get in, get out, collect the profits, move on. All right, so if we can get any suggestions, you guys want me to look at anything in particular, other than that, I'm just going to jump on to the next one. Now, that's what you would have gotten. This is what happened today. These are all the companies that went EX today. Now, these are the ones that are going EX tomorrow. So if you wanted to get in on any of these, you would have had to have bought them today or yesterday or sometime before. Okay? But if you want to get in, you can't get into any of these for tomorrow because their EX date is tomorrow, which means you had to buy them today. Now, Thursday, these companies you can still buy tomorrow in order to collect a dividend. Okay? But there's no guarantee because you only have 2 or 3 days before the EX date comes. But just for the fun of it, let's take a look at some of them. You get the high one of the days, HIW, and this is for the 22nd of December. So 22nd of December is right here. So 10 days prior to this would have been in the 8th. Okay, so had you gotten in on the 8th, let's see what would have happened. HIW is the first one we want to look at. HIW. All right, the high here on July 29th, 55.81. The low back in third week in January at 39. Last 3 weeks, going down a little bit, settles beginning of November, right around election day, drops, bottoms out 2 days after the election at 45.87, and a nice slow increase up to where we are today, around 50. Now, we said we were going to look at the 8th. Okay. Because you would have gotten the signal on the 7th, which means you would have gotten in the very first trades of the day, which means you get your trade in first thing in the morning. You would likely have gotten in at the open. That's what I like to do. Put my trades in the day before, so first thing in the morning, the stock market opens at 9:30. I usually get filled in by 9:31. So HIW opened up on the 8th at 49.12, and we're looking at 80-cent dividend. So 49.12, that'd be 49.92. That's what we're looking for a target. It didn't make it on the first day. Didn't make it on the second day. Didn't make it on the third day, but on the fourth day it did make it. Because 49.92 was a big step for $50 stock. Okay, but on the fourth day it did make the target price. Okay, EQR. Oh, and by the way, it's still got 2 more days before the dividend, so you could still get in. I don't know if I would though. EQR, that's a big red flag right there, because the high of the year back in December 31st of last year, and the low right hit the middle of November, and it's nothing but down for the whole year. Okay, so the last 90 days we're looking at sideways. She started out 90 days ago right at 64, bottomed out at 58, and now she's back up to 64 again. Okay, had we jumped in on the 8th, here we go, the 8th. Opened up at 62.29, and we're looking for 50 cents. So it would have been out the very first day. Gotta love it. IVR, get that in there. Okay, IVR, $15 stock, looking for a 40-cent dividend. Okay, the low of the year back in first week of February. The high of the year, 16.13 in September, first week of September, and she's been going sideways for the last 90 days. Look at that. Looks like interesting. Okay, let's jump over to the 8th and see what it says from the 8th. Okay, from the 8th IVR, we're looking for 40 cents from a $15 stock. That's a tough one. Before I even look at the numbers, that's a tough one to call. 40 cents for a $15 stock. Okay, so it opened up at $15.24. Means 40 cents would have been $15.64. And what was the high of the day? $15.65. So you would have hit it the very same day. However, hitting the high of the day, and the high of the day being your target price, you get in at $15.24 and you add 40 cents to that. You want to get out at $15.64, and it hits $16.65. You have a very small window of opportunity to get out at that price. If you didn't get out on the very first day, you most likely would have got out on the second day, because they had $15.68. Okay, because you opened up at $15.59, got out at high of the day was $15.68. But then again, the next day she went up higher, $15.78. Next day, $16.04. That trailing stop, man, gotta love it. Okay, so that's a pretty good idea for what's happening tomorrow. If you want to get into something tomorrow, then you also have Fridays too. This is what we're looking at Friday. CME, you guys heard of that one. Dow, you heard of that one. That's about all the ones I know off the top of my head. Okay. So tomorrow, being the 21st, we want to look at stocks that are paying out the dividend on the first week of December, which would be January 4th. Now, January 4th, we have 23 companies that are having dividends. So we are looking at the companies that have dividend payment on the 4th of, not a dividend payment, sorry, going EX on the 4th of January. Okay, the announcement was here for all these companies. There's 23 of them. The EX dividend date is the 4th. Okay, the date of record is the 6th, which means you have to hold it for a minimum of 2 days. When they're going to pay out, look at this, the 27th, the 13th, the 31st, February 1st, January 20th, January 18th, January 20th. Anyway, some of these companies you heard of, some of them you haven't. Look at this. Wire, not even going to look at that one. 2 cents, not worth it. CGI, not worth it. GNTX, 9 cents. I don't know. Depends on the price of the stock. May not. MON, Monsanto. Everybody knows Monsanto. MON. Let's take a look at MON. Now, this is where you have to decide whether you want to get in or not. It doesn't give you any past history. This is just giving you what it is today. The high of the year for Monsanto was 113. That's back in June. And the low was way in May, the beginning of May, at 83. She's at 105 right now, the last 90 days, basically going sideways. She started out 90 days ago, 102. Now she's at 105. Not a large movement. But I'm going to show you something that I use in order to help pick out where I'm going to go next. Click right over here where it says Style. Click on that. Little drop-down box opens up. You want to come to the fifth one down, and it says Chart Mode. You slide over here, put your cursor over there, and another box opens up to the right. Slide down here and look at the seasonality. Seasonality is going to tell you what it does normally. Okay, this blue squiggly line is the chart for what it's doing this year at this moment in time. The red is an average of what it does normally. Now we're into the last 2 weeks of December. And this is where she is. And look where Monsanto is going to go for the last 2 weeks of January. From here, she's going to go up. Oops. Not hugely, but from here, see that? This is where he is now. It's the price where we are now. And what does it look like? She's going to go up a little bit, and then she's going to go sideways. So we jump onto Monsanto, go up and sideways. And let's put Monsanto into our software. Okay. Now, Monsanto, M-O-N, and it's paying out its dividend, remember, in the first week of January. So we have to move this over to January. Wait for it to populate right there and hit. Okay. What I want to do is explain to you all this here. Let's get rid of that by clicking onto here. So the green line is the average. Okay, this is the dividend date or the dividend line. It tells me if I click on each one of these, it tells me what dividend it was. This is 2013, January 2nd. Okay, January 2nd in 2013, they paid their dividend. 2012, it was January 4th. 2007, January 3rd. So it plots all data from the dividend date, regardless of when the date was. Well, it was the 3rd, the 4th, the 5th. It's always from the dividend 10 days out or 10 days forward. Okay? So 10 days prior to the dividend date, or right here, look where she is. She averages at 35.8, and then she slowly moves up till we get to right here. Now these numbers here, I can't really show them to you because every time I move this, the numbers move. But the number to the right, okay, the 51.08, that's just the number used on this type of graph, because you can't put one chart on top of another, because the prices of 2007 aren't the same as the prices in 2016. So you had to give the high of that time frame a certain number and the low of that time frame another certain number in order to compare apples to apples. So in that time frame, what was the high, what was the low, what was the movement in conjunction with the dividend. So 10 days prior to the dividend, it was down low and she moves up. Okay, what happens at the dividend date? Right here, EX date, and she moves up a little bit more before she corrects a little bit, and then a nice slight upward trend. So is it going to be higher than what we got in? The chart says so. And how long does it take us to get out? An average of 1.2 days. So we're out within a day. All right, let's quickly look at what we're looking at. The price at the moment is 105. The low for the year is 83. The high is 114. The yield is 2%. The dividend is 54 cents and has 1 million shares trading on average. So let's jump and look at the other chart. Basically going to tell us the exact same thing. Let's get out of here and hit MON, and we hit go. And it's basically going to give us the exact same numbers. 102, 105, closed. The high was 114, the low was 83, and they have a 1-year target of 119. Everything for MON looks like a go. One more thing we want to check is we want to click on this, and that's going to send us right to Yahoo Finance. And what are we going to find out at Yahoo Finance? We're going to look at the 10-year chart from 10 years ago to where we are today. Now, let me explain a few things that we're looking at here. We're looking at 10 years worth of data. 10 years ago, we could have got Monsanto. Let's come down, come on. At $55. Okay, 10 years ago, $55. Granted, she hit, 125 back in 08, but, going sideways for quite a while. And she settled somewhere at 105 today. And look at all these dividend payments. Every quarter, paying a dividend. Love it, love it, love it, love it. Okay, so those are great. And no huge spikes in volume except for back here, 08, 09. When everything tanked in 08. Of course it's going to drop. Okay, so the 10-year chart looks great for Monsanto. The dividend looks great. Okay. My seasonality chart looks great. You get it in 10 days prior to. She moves up, get your money out, and she still continues to move up about 8 days out. For another week, she continues to move up. Then she comes back down again. and go sideways for a little while. So we're looking to get into this one and get out of this one in one day. Great. So let's go to a trade. And she's not opening up. A little on the slow side today. That's okay. Let's come back to our... Here we go. Come on in. Now we have options listed here, but we don't want to look at options. Get rid of the option chains. Okay. And we were looking last week at Dow, but we didn't get into that one, so let's get rid of that one. Okay, right click on this. Okay, we have a buy, we have a sell, and then we have a buy custom. You click on buy custom, or have your cursor on it, and a drop down window opens up. Now this gives you, whoops, buy custom. You don't want to hit sell custom because it gives you the exact same thing, but you're on the wrong side of it. Buy custom gives you the, with OCO brackets, means one order cancels the other order. It gives you a bracket. Then it gives you a stop limit, but it doesn't give you a trailing stop. Oh, here's a trailing stop right down here. Trailing stop is a little bit more of a challenge, but we're not going to go into that one. But we want to get this one right here. Okay, that fills in automatically for the 100 shares to buy, 100 shares to sell, and it's triggered by a 2.5% move, or I can change that to manual. Wait a minute, I want to change that to trigger. Yeah, trade that to trigger, and I want to have it plus or minus. What was the dividend on this one again? Like 50 cents? 0.54, 54 cents. I think what it was. Monsanto was 54 cents. Yeah. Okay, so we're going to buy it at the market for the day, and then we're going to sell it for whatever we paid for it, plus 54 cents limit with a good till cancel. Now this is already preset, so the only thing you're doing is you're filling in the numbers. Okay, you click the buy or confirm, and it fills it in. Okay, so we're buying 100 Monsanto at the market to open, and then we're selling Monsanto triggered by that order plus the 54 cents limit order, good till cancel, and extended time triggered by the number one trade to open. Okay, what it's going to cost me? It's costing me a grand total of $9.05 for the commission, and it's going to tie up $10,558. Okay, on margin, it's going to be $5,274. So send that one, and it's off to the races. Anyway, that's basically how we're going to do it. Get in, get out, make your trades, make your profits, and then just move on with the to the next one. So what is the next one? Back to Market Watch. THFF. Let's go back to the style, back to chart mode, back to the standard, and we want to look at THFF. This one's interesting. It's a $50 stock at the moment. We're looking at a 50-cent dividend. It has a low back in January, third week in January, $30. And she's almost doubled in price right at the election. Look at that. The high of the year, which is today, 52.63, and the low of the year, way down here, second week in January, third week in January, 31. And I think basically you got a nice upward move all the way to November 7th. And what happens November 7th? Look at that. Not a whole heck of a lot happening November 7th. November 8th, election day, a down day. Trump gets in office, and then look, it's like a 45-degree angle going upwards. That's nuts. Can it sustain that? I don't know. I honestly couldn't tell you. But it's got a 50-cent dividend coming up, and let's see what the other software is going to tell you. First, let's take a look at Thinkorswim seasonality. Okay, Thinkorswim seasonality shows it basically going sideways. So what does that mean? It's going to go up just ever so slightly, not hugely, but ever so slightly, and go sideways. All right, let's look at my software. THFF, correct? That's what we're looking at. THFF. All right. I forget once in a while. Sorry, I'm getting old. All right. Let's get out of Monsanto and put THFF. It's the same time frame, January 4th. So let's plot the dividend there. And here's your answer. Number one, I'm going to go through the list of why we're not going to do this one. Okay, that one chart you looked at from Thinkorswim, that looked good. But here we're looking at historical data. And what do we get? 3 years of historical data. That's it. That float my boat? No, it don't. Look at the yield, 1.9. No, thank you. The volume, 29,000. You're going to be the only person on the dance floor. The only person trading that stock. No, thanks. One more thing. Let's take a look at the chart. Right here, you buy it. It goes up, what, 1 day, 2 days? And then she drops for like 10 days. Sideways for a little bit and slow upward move. You may recoup it. I don't know. To me, no thank you. I don't even want to look at the next one. All right, we'll close that one because we don't need that one open. Well, let's go back. So we didn't like THFF. JPM, we all know that's JP Morgan. JPM, I don't like JP Morgan because all the money they took. I know, but look, towards the end of the year, here's where we are. What's she going to do? She's going to go up ever so slightly to the end of the year. So it is going to move up. Okay, so let's go back to the standard chart. Let's see what that looks like. Again, look at this. The high of the year was today, 86.63. The low way down here back in beginning of February. And when did she start moving up? She started moving up, booyah, right there, day before the election. 11/7, day before the election, she was at 69.51. Election day, 69.46. And she did nothing but move up after that. Is it continuing to go up? I honestly couldn't tell you. Okay, but she's looking at a 48 cent dividend coming up in 2 weeks. So in January, they're going to be paying out the 48 cents. So let's take a look at what the other software says. Same time frame, JPM, and plot the dividend. Okay, we got our 10 years worth of data. This is great. Now, 2016 is showing 0 because we haven't gotten there yet. Okay. Let's hit the average. Okay. Other than that, we're looking at 1 day, just about. Okay, so 10 days prior to, she's way down here. Going up into the dividend, she moves up nicely. Okay, after it pays its dividend, she drops and then moves up after that. Okay, so it looks like, from what this chart is telling me, it looks like you get in 10 days prior to, you take the dividend price, you take the dividend money and get the heck out. How much of dividend are we paying? We're paying right around 48 cents. 14 million shares traded on average on a daily basis. And you have a 2.2% yield. Okay, the high of the year is 86. The low is 52. Let's take a look at the other chart, and we'll look at JPM. I'm gonna hit go and see what JPM does. Okay, look at our 1 day. It's got a 1 year. See, now this doesn't look good. Okay, so this is, you're gonna have to weigh the pros and cons on this one. I get the close of 85. The high is 86.54. So you're very close to the high at the moment. The low is 52, but it has a 1 year target of 81.66. Okay, 48 cent dividend and a 2.2% yield. Okay, all those numbers look good except for the 1 year target. If it's at 85 now, why do you want to buy something that they're thinking is going to go down in a year? Let's take a look at the chart, see what the chart says. Okay, JP Morgan or JP Morgan Chase. All right, 10 years ago, she was right around $50. Okay, does nothing but go sideways for 8 years. Last 2 years, slow upward move, and it's a very slow upward growth right up until the election. Then the election, the thing shoots from 69 all the way up to 86. It's like a $20 move. A $20 move on a $60 stock is like a 30% move within a very short period of time. Okay, so anyway, that chart looks good. Everything looks good except for the projection. They're projecting it to be around 81 next year. If that's something you want to do, that's a choice you're going to have to make. But if you just want to grab the dividend and get out, it's a 2% dividend. Everything shows that it's going to get out in a day or 2 days. Is it going to be? I don't know. Can't really tell you. Now, I usually take questions for the last 15 minutes, but we won't have any questions at the moment because we're still in the testing phase. So we're still testing, trying to get comfortable with the presentation, get comfortable with what we're going over. And I haven't got any questions. I did get one question the other day. Had something to do with high-price stocks. What's the difference between high-price stock and a low-price stock? There really isn't much of a difference when you're looking rate of return. It's 2% is 2%. So if you're getting 2% on $1,000 or getting 2% on $100, it's still 2%. Okay, but it's easier for people to comprehend or to buy per share a lower dollar stock. A $100 stock is easier to buy than a $1,000 stock. Okay, for $1,000 you can buy 10 shares of a $100 stock, but you can only get one $1,000 share. Anyway, not the point. Okay, questions, answers. That's what we're looking to do for the last 15 minutes of the show. So that's where we are now. Other than that, the software we got is going to isolate, what has done in the past, and it gives you an idea of where it's going to go in the future. Okay, J.P. Morgan, look at this. 07, one day you hit the target, one day you hit the target, one day you hit the target. 2012 took 2 days to hit the target. Okay, 2015, 2 days hit the target. 2016, we're not there yet, so you really can't give a number for 2016. But it averages 1.1 days to get out of that one. This software, this tells you the same thing. The only thing I don't like is right here, the 1 year target. It has a nice yield, 2.2. The volume's plenty of volume there. You jump in, you get your profit, and you get out. Let's see what it's going to look like for the next few days. Okay, J.P. Morgan. All right, everyone. So we're going to quit now because it's quarter of. I don't have very many questions to answer. Hopefully this Thursday we'll hit you up with some more questions, and that way we're going to be getting into options on Thursday. Thursday is my option day, a little bit more of an advanced class. This gives you easy breezy. You collect your dividends or the dividends equivalents within 1 or 2 days. Get in, get out, get your money, and then move on to the next one. The first week of January, you got 11 on the 3rd. Some of these companies you heard of Oracle. You've heard of, I don't even know those. Erie. I think that's an electric company. I'm not 100% sure. The 23rd, Monsanto, J.P. Morgan, American Express, Costco, Gold, Morning Sachs, some other ones, Raven. January the 5th. Look at this. Only 5 companies on the 5th. But what do you got? You got MasterCard. Ooh, that's a good one. MasterCard, I don't like the yield, but they come up with ones all the time. And on Friday, we got Verizon, AT&T. That AT&T telling you right now, that is a no-brainer. They're paying a great dividend, and the chart always looks great. And you know who AT&T is. They've been paying out dividends for over 100 years. Oh, definitely no-brainer. Okay, anyway. So that's it. I'm going to look forward to seeing you guys on Thursday. You know what? Just for the fun of it, I'm probably going to jump in tomorrow and probably do a quick little, hey, what's going on type thing. Because I got a bunch of stocks I'm sitting on waiting for the play for this Friday. A lot of weekly options up on that expiring this Friday, so I like to check in on them every day and see what they're doing. So I might do that tomorrow. Don't know what time, but just giving you a heads up on that. So I will see you guys later. If you're not a member already, just go to the 10-Minute Trader, become a member, and you have access to all that software. a quick look at that software again. Here we go. You just put the stock symbol in, and it tells you what it's done for the last 10 years and what the odds are of being able to get back to you. All the information's right there. Right? It took me hours to get this information before. Now I can do it in a couple of seconds. Just put that in and hit go. That's pretty good. And this here seasonality chart. It's like one chart on top of another. It looks like spaghetti at first, but once you get a hang of it, it's like, hey, here's the dividend, EX dividend. It's 10 days from now. Okay, this is like tomorrow's date. Okay, supposedly this is gonna be tomorrow's date. If I get in tomorrow, what am I looking at? I'm looking at a nice upward move right up into the EX date. I want to get out between then and now, between now and then. Okay, but anyway, this is James from the 10-Minute Trader. Money makes life easier, and Dividend Stock Talk. Hey, you guys want to collect some nice dividends? I got 2 accounts that I'm looking at that I've been trading all year. One's at 25% for the year, and the other one's at almost 60. I'm looking to hit 60 on that one. I was shooting for 50, but the other day she shot up at 62, and I said, whoa, this is cool. But I'm doing a lot of option trades on that one. The 25% is straight dividends, no options on that one at all, but just straight dividend capturing, straight dividend investing. So hopefully I'll see you as a member. I can answer any of your questions you got, and I will see you